Hey everyone, welcome back to our channel, The Crypto Guys. My name is Pat, and in today's video we're going to be discussing how the Russia-Ukraine conflict is affecting the crypto markets. But before we get started, as always, this is not financial advice, and these videos are strictly for educational purposes only. Now we do know that this topic may be controversial for some of you, and we really did our best to make sure we focused on the crypto markets themselves. So, if you haven't already, please subscribe to our channel, drop a like in this video, but with that being said, let's get started. The crypto market has become even more volatile as a result of Russia's invasion of Ukraine last week, according to experts. Stock markets were immediately devastated by Putin's invasion of Ukraine, but cryptocurrency investors were also hammered hard after Bitcoin, Ethereum, and Solana followed the market's drop on Thursday. The previously thought to be separate relationship between cryptocurrency and the stock market is becoming increasingly evident, and the Ukraine war is the latest sign that digital currencies like Bitcoin are not immune to the real world. Following reports that Russia had invaded Ukraine, stock markets around the world fell Thursday morning, prompting many investors to shift their money to safer havens. When trading began on Thursday morning, all three major U.S. stocks were down more than 2%, exacerbated by a jump in commodity prices, including oil, wheat, and steel. In times of uncertainty and war, investors have historically relied on stable assets like gold. But crypto advocates have argued that cryptocurrency's ability to separate itself from financial markets make it ideal to invest in when other markets are volatile, with some even dubbing Bitcoin as, quote, digital gold, end quote. However, gold is currently performing exceptionally well, while Bitcoin and other cryptocurrencies are falling even faster than the stock market. The global market value of cryptocurrency fell about 8% on Thursday, wiping out over $150 billion in less than 24 hours. Several currencies, including the Solana and Shiba Inu, dropped as much as 10%. In a tweet, Sam Bankman-Fried, the founder and CEO of FTX, a prominent cryptocurrency exchange, indicated that algorithmic trading is a primary reason for the dip. Algorithmic cryptocurrency trading is based on pre-programmed instructions for trading cryptocurrencies. These systems are usually based on existing data that takes their cues from how the financial markets are performing. And right now, the Ukraine issue is causing all investors to sell and all stock markets to fall, resulting in a drop in crypto that is in line with the declines in more traditional financial assets. For a long time, Bitcoin and traditional stocks have been advancing in lockstep. The stock market's terrible start to 2022 coincides with a similar drop in Bitcoin as Federal Reserve measures such as rising interest rates encourage sell-offs of both digital and real-world assets. As more big banks begin to offer digital asset lending services, the performance of major indexes and more conventional financial assets is becoming increasingly linked to Bitcoin. In January, Zach Pandal, Goldman Sachs co-head of foreign exchange strategy, told the Financial Times that prior to the pandemic, Bitcoin and other digital assets showed low correlations to traditional financial market variables. In effect, crypto behaved as a wholly new ecosystem. However, as Bitcoin has gained widespread acceptance over the previous 2 years, its association with macro assets has increased. One of the numerous costs of war is the global financial consequences. Experts also expect a large human toll, with Ukrainian President Vladimir Zelensky claiming that more than 100 Ukrainians were killed on the first day after the invasion. The invasion has also thrown Ukrainian civilians' lives into disarray, with many attempting to evacuate the nation while Zelensky advises others to prepare to protect their homes against Russian soldiers and the attacks. Experts predict that while the battles continue, volatility in global financial markets, including cryptocurrencies, will increase. Quote, "There is a significant degree of volatility that comes with conflict, regardless of asset class," says Doug Bonaparte, a certified financial advisor and founder of Bonafide Wealth. "It'll make it even more difficult for investors to stick to their ideas." Immediately after the invasion began, Bitcoin fell below 35,000, while Ethereum fell below 2,400, but both have subsequently risen, due to the current global political concerns in Europe approaching inflation, and the likelihood of interest rate hikes by the U.S. Federal Reserve, among other causes. Bitcoin has declined by more than 30% since its November high of $68,990. The price of Ethereum has dropped to its lowest level since late January, and global financial markets have also fallen. With no signs of slowing in what President Biden termed as Russian President Vladimir Putin's act of war, experts believe Bitcoin investors can expect greater volatility in the future. However, like with regular crypto volatility, experts advise investors to stick to a long-term approach. Here's what crypto specialists have to say about the crypto market's recent volatility, which has been fueled by Russia's invasion of Ukraine. First, how experts are reacting to swinging crypto prices. Risk assets have been battered by Russia's invasion of Ukraine, according to experts, while conventional safe havens like gold and the US dollar have risen. Here's what they feel is driving the market right now for crypto investors. 2. Crypto is tracking the stock market. Because of its volatility and greater link to the stock markets, the case for Bitcoin as a, quote, secure, end quote, asset, like gold, is eroding. According to Ben McMillan, Chief Investment Officer of IDX Digital Assets, a restoration of investor risk appetite across asset classes, which, for the time being, looks like it will be primarily driven by the unfolding of events in Ukraine, McMillan writes, is required for Bitcoin to sustain a climb over $45,000. Despite enthusiast claims that crypto is uncorrelated from traditional financial markets, Bonaparte claims that the crypto market is reacting to the news of Russia's invasion of Ukraine in the same way that the stock markets are. Quote, "My first impression is something that we've seen before. Crypto, particularly Bitcoin and Ethereum, are risk-on investments," Bonaparte says. "They fluctuate in value exactly like stocks. You've been seeing markets fall overnight and throughout the day today, and you've been watching crypto do the same." End quote. Bonaparte believes that only time will tell if crypto investors were merely reacting to the events in a knee-jerk manner. Does crypto decouple itself from the stock market, or does it continue to follow the same path as the stock market? We'll find out, he declares. Third, more mainstream crypto adoption. According to Laura Sheen, a crypto podcast presenter and author of The Cryptopians, Idealism, Greed, Lies, and the Making of the First Big Cryptocurrency Craze, the crypto market is gradually moving in lockstep with the capital markets. Whether the crypto diehards or more macro-driven persons control the narrative, and whether the crypto trader is leveraged positions gets wiped out and drag the markets down with them, she says, will determine how the crypto markets perform in the coming months. Fourth, slumping prices in recent months. According to Wendy O, a crypto investor and popular TikToker, the current reaction of the crypto market is, quote, pretty normal, unquote, given that it has been declining over the past few months. With global uncertainty, she argues, we're witnessing more volatility, bearish price action, and the markets will continue to see lower highs unless we can break out of Bitcoin's current downtrend. Now, what does that mean for investors? Cryptocurrencies are extremely volatile assets, which are becoming even more so due to the result of Russia's invasion of Ukraine. According to experts, the greatest thing investors can do right now is remain cool and avoid making knee-jerk reactions to market movements. Stick to your long-term investment approach instead. Bonaparte advises developing a long-term plan now if you don't already have one. Be very careful not to make financial blunders you'll regret in the future because you panicked or couldn't handle the current volatility, Bonaparte advises. Ultimately, your capacity to stay disciplined and invested will determine whether you succeed or fail. While there aren't any changes crypto advisors need to make right now, it's a good reminder that crypto assets are extremely volatile. That's why most investors should stick to the major two cryptocurrencies, Bitcoin and Ethereum, and only invest what they are willing to lose, or less than 5% of their overall portfolio, according to experts. You should always prioritize crucial elements of your budget over Bitcoin investments, such as emergency savings, paying off high-interest debt, and saving for your retirement. Stick with a prominent high-volume cryptocurrency exchange like Coinbase, Gemini, or FTX, which proactively complies with the growing federal and state regulators while buying and trading crypto. What did you think of our video? Let us know in the comment section below. If you enjoyed the video and want to hear from us again, please be sure to hit that subscribe button before you go. And if you haven't already, please check out our website at www.lunacopper.com. Thanks for watching and have a great day.